it off. Awesome. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Good. Doc, welcome, man. Love it. Okay, comments from me. Ashish, Miriam, Happy New Year, Miriam. Happy New Year all around. I hope you guys had a good break and everything, and back to work, doing all your things there. You still got a job. That's good. And, hey, million COVID cases out there, but it's okay. We're all just moving along. And the market, we would think could care less, right? 1 million cases, and the market doesn't care at all, one bit, not even a little bit. Kind of interesting, but today was a pretty simple day. We'll cover that here. We're financial advisors here at Jazz Wealth. We like talking about the stock market because we're one of the only advisors that actually pays attention, does that stuff, and isn't just always about patting you on the back and saying, you'll be fine, just save a little more money. That bothers me. Anyways, Thursday's class, Wine and Wealth this week is going to be rather interesting. I got a little bored over the holidays there, and so I made a whole checklist, 2 pages long. I'm going to go over all of that. What are some things that maybe I need to know about for the beginning of the year, some things we can do better, and then, of course, we'll make that checklist available to you. So we're going to go in great detail on that one. Congratulations to the Guess the Dow winners for the Super Duper Guess the Dow. Did we tell them they won? What? Have we told the Super Duper Guess the Dow winners that they won? We pay them? Give them money? Oh, we're on track. Okay. I'm just making sure. Didn't hear about that. I don't want to be those people the things that they're like, hey, go to the Super Bowl, spend on your Visa card. You go, where's that guy?
You never know who
I'd
wins
like to
those
see
things.
that. I think that should be a law. We're regulating stuff with old Biden out there. Let's go. Let's regulate this stuff. If somebody won the clearinghouse sweepstakes thing and they get a big check, where's this person at? I'd like to see them.
Oh, they do the videos of the big checks, right? At the front
That's
door
from
and stuff.
previous years. Let's see. And the lottery winners. What's up with man, conspiracy guy. Here we go. Anyways, so congratulations there. Our class, Wine and Wealth, I already talked about that one. And today's market's actually kind of simple to digest, and it's pretty obvious. So I'm going to share with you how you come to that looking through it. It was one of those days where interest rates started to hit growth stocks and money moved to value stocks. In other words, people were taking profits on things that did really well. Now that it's a new year and they've got essentially 16 months until they got to pay taxes. And the money went to more discounted stocks that maybe weren't going to be as affected by interest rates or not as much, meaning have lower debt. So anyways, let's dive in and take a look. Here's the S&P. We pretty much hovered around the flat line today. Tech stocks were what weighed on you. So if you're using something like the XLK, you're going to notice a weakness there. That was one of the weaker sectors overall there. And like I said, rising rates were the cause, but how do you know specifically where the issues were? How do you tell? Well, one of the things you can do is you can bucketize the market by a factor or by some fundamental analysis, technical analysis, and you can kind of see which stocks are weaker. And we like to do that here. So if you were to bucketize the S&P by those with the highest debt, right? Companies with the highest debt relative to total equity, long-term debt, things like that. You'd notice that those were the weaker ones overall. So you don't have to guess. Was it large cap? Was it the small caps there? Was it dividend stocks, high-paying dividend, low-paying dividends, high valuations, low valuations? You can kind of just take a look through and see. So if we were to, just as an example, if I were to go over here to something like a Etsy, right? A lot of debt on the books there. They operate with a lot of debt, and that was I believe the weakest one of the weakest ones overall in the S&P. If you were to look at something like Enphase, there's your weaker performance on the day, higher debt to income or debt to total equity or total cash on hand. A lot of that going on there. You had Caesars. There we go. Caesars Resorts down 4% on the day. Same thing. So it was real quick to be able to see, interest rates are actually having an effect on these stocks now, and we can tell that because they were the stocks that tend to carry more debt or like to issue more debt. So you had that going on today. And then other than that, you had the obvious virus stocks. Carnival Cruise Lines had a decent day, up 1.5%. We happen to own IHG. Hotel company, you're probably familiar with them if you have the rewards program because they market like crazy. About 4% gain on the day. Otherwise, stocks that should have been down based on high virus case counts But otherwise, they did good. And nobody seemed to care. Everything just kind of moved on there. Even like Royal Caribbean, the common ones that everybody likes to look at, about 2% there, despite a million freaking cases going on out there. Apple didn't close at the $3 trillion mark there, but we talked about this yesterday. There were $3 trillion. I was just looking around. This is fascinating. So here's a quick chart of Apple, their valuation, or their current market cap versus the S&P. So we're about 2.94, let's call it $2.95 trillion they're worth. The S&P, 38.74 as of today. Well, let's see, that's about 8%, right? So Apple is now 8% of the total market cap of the entire S&P 500. Quite fascinating there. I saw some things that said at this pace, their services division, or their revenue driven by services, which has been growing over the years, would reach $100 billion in 2 years there. That's crazy. Not that they're not killing it out there, but this is what happens when you do $20 billion in stock buybacks every single month or every quarter. Now, valuation-wise, let's go back over here real quick. We'll take this market cap out. Let's go to valuation. And let's take the S&P out so you can see. All right, so here is current PE ratio of Apple, basically what they're worth per share relative to their earnings. It's not the highest it's ever been, 31, 32 times earnings overall. The average over the last 10 years is about 18 times, so you know you're paying up for it at this point. I mean, you probably could tell that by the chart. But all in all, it's trading a little bit more expensive than it normally does and close to 10-year record highs there. So something to consider if you are seeing the Apple excitement and you're like, I got to get in on that, man. That's incredible. You might be just a little bit late, or you might be looking for a pullback would be ideal. The Nasdaq was the weakest by far today. It did close off its lows just a little bit, but it was pummeled today thanks to really stocks that drive a lot of their growth or future growth based on debt, and have either little to no income relative to their total sales there. Maybe they use debt to make that happen to some degree. So Etsy was a great example. I already shared that with you guys just a second ago. You're finding your weakness there. IDEX is another one. There's your weakness overall. To some degree, IDEX fits in that category. You have Penn National, one of the weaker ones, and has been weak in overall, and Pinterest making new lows on the day, down 9% there. It is a little bit due more to their valuation, but still, that's how you're finding those stocks that are inside that mix. The Dow hit new highs, closed at new record highs. Also for the day, had a handful of good stocks in there that carried the weight, so to speak. You got Caterpillar, nice little breakout there on Caterpillar, and the financials. JP Morgan, American Express, Goldman Sachs. A lot of people's now saying, I get it. Rates are moving higher, and now I actually see it. Take a look. Here's the short-term bonds. You got, as price moves lower, rates are moving higher. And they go, okay, this is the lowest price we've seen in a while. Actually, going to go back to early last year to see that. They go, now that I see it, okay, now I want to make those adjustments. So I want to be in financials now that it's not just talk and you can actually see it kind of happening there. Bank stocks in general, like I mentioned already, they got a little bit of a boost today and continue to do well thanks to the higher rates there. And I think the banking sector is like first place year to date. No, energy's still in first place, but banks in second place with about a 4% gain so far this year, by the way. Crude oil is one to mention today, slight gain, 1.5% on the day. OPEC says they're going to stay the course with their production hikes in March. I think it was March. 400,000 barrels a day. That was widely expected. Everybody had planned on that happening because that's what they said they were going to do. And it's just they're letting you know they're not changing anything overall. And gold up about 1% on the day, just back and forth. Choppy, tough place to be investing right now. Industrial's a little bit higher also. That's maybe going to break out. Look at that. Long sideways consolidation, maybe going to break out. Caterpillar helped that one out today. All right, lesson of the day here. I want you to think outside the box a little bit. Maybe this is the year where instead of just going with the flow and, hey, everybody's over here at GameStop and or whatever they decide to do this year, you start thinking about how to find and build a portfolio or a group of positions based on some kind of economic data, right? It doesn't always have to be the obvious. And so I want to share one of those here with you today. We want to let the data help us find new ideas. This is not necessarily a recommendation, of course, to buy stuff, but I'll show you how I come to some of these decisions. Here is, if you look at Indeed, Indeed actually allows you to pull the data from them about their job postings. Job postings have pulled back just a little bit, but they're sitting at all-time highs. Well, they break it out by the most popular areas for job listings. So why can't we use this to come up with ideas? These are the top 10. First one's human resources, right? Could we find some stocks in the human resources division or software that assists with human resources to look at? Why would we do that? We look at if human resources is the #1 job listing on Indeed. Well, what does that mean? You need more HR people when you're hiring more people, your company is growing. So there's a lot of that going on. So you would look at those companies that are hiring. Software development is kind of always near the top and has been for the last couple of years. Production, manufacturing, that's a good sign. We got people out there producing stuff to meet demand, right? So if we need to hire more production people to whatever they're making, widgets and things like that, all right, it gives you an idea where to look. Loading and stocking. Okay, right? We're doing a lot of shipping here lately. That wasn't just for the holidays. That's actual data right up to the date here. Logistics support. That could be C.H. Robinson, J.B. Hunt, things like that. Actually, I think J.B. Hunt hit new highs today, didn't it? JBHT. Nope, got to type it right, bud. JBHT. There you go. Yeah, it did hit new highs. So new breakout for them. And you're largely using this as an idea to start looking for stocks like that. They just come to my head when I'm talking about them. But these are the top 10. So as you find this sort of thing, you go, you wouldn't be hiring if you didn't have the money or your business wasn't growing and in need of that. So let's dive deeper, right? It makes you want to look at that sort of thing. So kind of the lesson here is using alternative data to come up with ideas. Remember when Ford, I don't know, was it October or something like that, Ford had all their trucks in this Kentucky Speedway and they just piled them all in there, thousands of trucks. And it was because they couldn't get the chips that they needed to finish production and actually sell the trucks. Well, the popular thing was for hedge funds and people to use satellite images of the Kentucky Speedway to actually see movement of those trucks. And kind of paid off, right? As those trucks moved out, stock price went up. So we don't always have to be looking at, although it's fun, we don't always have to look at charts and go, I think it's going to break out or whatever it is. That's the technical trading. That's the fun sort of day-to-day stuff that you do. But when you're building a portfolio, you want to know that there's a commitment to growth, a commitment to filling demand, which ultimately could help drive the stock price higher if, that's accurate, and that does continue. What else do I have? The only position I had at the moment, just as a fun little trade, was Broadcom. And it did rally a little bit. I've got about 12% of the total premium collected, but it hasn't really pulled back in any meaningful way there. So I continue with the 700-710 call spread, and we'll see what happens there. Oh, by the way, starting, I'm hoping February, just next couple weeks, we're going to it'll be on our research site. We'll just go live. And we're setting it up to be, hey, we're going to do some trades, right? Instead of me just coming here and saying, I did this trade, too bad, there's nothing you can do about it. We're actually going to put that in the research site. So you can see how we would build a portfolio of positions, maneuver that portfolio, and kind of determine the risk metrics and things like that. I promise you it's something nobody has done. They don't talk about it this way. Most people that publicly do it, they're like, I can pick a hot stock. Okay, you have a 52% chance of picking a hot stock. So Kramer, they give him grief. He's actually really good at it. He's at 55%. So he's slightly better than average, which is great. So I want to actually show the whole other side of it. So be working on that as well, just to tease it a little bit. What do we got? 69 new highs, I believe. Yep, and one new low on the day. That would be Twitter. Twitter was your only new low. That did break down to new lows. Rough one there. Twitter's not doing too well. Ford, we own this one. Happy to see it breaks to new highs there. It continues from that breakout the other day. Looking real good there. And what was it? No, Toyota. Toyota was the one that is now, what is it? Toyota's the top U.S. brand by sales. So Toyota getting a much needed breakout there. We happen to own that, so that's cool. I'm happy to see some of these automakers doing well, and congratulations to Toyota. Fang moving higher. That's going to be just because of oil prices. Energy as a whole had a good move today. That one just happened to hit new highs. Of course, happy to see that as well. And Raymond James. Really, a lot of the financials did well. You could find a bunch of them on the list today. Aflac broke out to new highs. That's yet another breakout for Aflac. But Raymond James, Schwab was in there hitting new highs as well. A lot of the brokers, they call them capital-based financials, where it's trading, it's the interest margin they're making, or margin interest they're making, things like that. All good for them. And then to go with JB Hunt a minute ago, CH Robinson, also in the transport space, hit new highs, and just a couple that I was just pointing out. It's a little extended. Just be careful with that. In the news, what do we have here? Get my little sheet up. Carrier in the news. They're doing a $500 million buyback, and they're going to speed it up. They call it an accelerated buyback. It's always good for stock prices. It tends to move the stock higher, and it did today by about 2.5%. Ford, well, I already talked about that. So Ford hit new highs. Ford says it's going to have to double the production of its the F-150 Lightning that can power your house because of all the demand there. I think they stopped it at 200,000 reservations. So a little Tesla competition coming in there, and I know that truck's obviously their best seller and one that everybody likes, so see. Digital Realty, a little bit lower on the day. They're buying out somebody. I can't remember the name of the company. I was going to look into this a little bit. It's a data platform, Terrico, but they're paying $3.5 billion for it, and so they're going to need a little debt, going to do a little bit of so maybe sell some shares and use some cash up to do that. Stock's a little bit lower. There you go. Next, so this is the when you see QSR, think of I've never been there. Popeyes. Have you ever been to Popeyes, Cody?
No, I don't think I've ever had.
We have Popeyes, right? There are lots of Popeyes.
Right across the street.
That's right. We should have Popeyes. Let's try it out. Is it like fast food?
Yeah, it's fast food. New year, new resolutions.
Oh, it's bad food. Well, it's good, but not good for you. All right. Well, maybe not. But anyways, QSR is Popeyes, and looking at them, they want to expand in South Korea. So I don't know. Right? Maybe popular over there. The market seems to not agree. You've got Foot Locker, also a little bit lower on the day. So Foot Locker got a downgrade earlier today by J.P. Morgan. And I think a handful of others on price and interest rates, I believe, for Foot Locker. That's really it. There's not a lot there. You got Costco sales coming out tomorrow for December. That's always a mover. So if you own Costco, it's been nothing but up, right, in terms of their sales. But that'll come out. I think Ford is also going to release their sales. This is the week where all the automakers come out and release their sales. So I think you've got something like that happening. Yeah, happy to take your questions there, see what I can do for you, but not a whole lot to cover today. It was basically one of those days where rates dominated everything that people did. Okay, if I have a great profit in a stock and it's going to be sensitive to interest rates, or it's one of those growth stocks that raises a lot of money and is still in their growth phase, maybe I'll put the money in some kind of value stock or discounted stock, unless it's Twitter, because, well, they got beaten down. Starting to sound like Peter Lynch. Is that a compliment? I wouldn't mind sounding like his wallet. Oh, man. Oh, boy. Twitter's almost done. No reason. You don't like Twitter? I've never been able to get going on Twitter. It's one of those things. I'm like, what am I going to say? I'm already here. So I've never really used it much. I open it up every now and then just to see, but maybe I'm what the masses are kind of deciding there. Maybe there's just other places to go. SE, think that one's going lower in the short term. There's no reason for it to bounce here, and think about what just happened. So lots of people like buying extended dips. I'm one of them, right? But here's a extended dip that has attempted to bounce a couple times and couldn't get it done, right? So now you end up with new lows, yeah. So it hits new lows here. Somebody big, not Tencent maybe? Somebody sold a big position in this one, or is selling a big position. I don't know that it was just today though. Anyways, so you expect it to go lower. Yeah, you don't look at this and say, well, that's good news for people that want to buy. Yeah, I'll buy it now, right? It's got that bearish pattern to it at the moment, and the bearish bias. So I would think, yeah, it's likely going lower or sideways for the time being. No need to go running into it. Higher rates more beneficial to regional banks more than the big banks. Absolutely. Yeah. remember, the big banks have other forms of revenue. They can do mergers, IPOs, they maybe do different types of lending, whereas regional banks, they're pretty much based on interest rates. They're just various lending. They don't have trading desks, most of them, and so they really would like to see rates higher, and that should be helpful for them. Giovanni sold some Apple and Tesla yesterday. Well, that was a good one. Buy more Twitter. Going for Twitter, Pinterest, and Snap. Well, you got discounts there. Twitter's tough, right? That's a tough one there. Pinterest, I would say you might find a little more excitement to, because I think that has a floor to it. I don't know about Twitter. I couldn't say that that would be a good spot to be in that one. And then you obviously are going for the social media thing here. And so some of these that are not the Facebooks and not well, you can't do TikTok, but not that LinkedIn to TikTok sort of focus, they're just, not doing well. TikTok was the most visited site in all of 2021. Beat out Google, by the way. Did you know that? We did. Okay. Yeah. I'm not sick. I remember things. Yeah, no problem here. XLK thoughts. I think you hope that it pulls back, right? You're hoping that this is the start. People take interest rates seriously, and maybe you get a real pullback. I haven't seen a real pullback in this or the market for over a year and a half now. So I think that's if you have to have a thought or a hope, that's what you're looking for. And you don't like to say hope around the market. That's the one 4-letter word that it doesn't like. You bought SoFi as a long-term play. I like it. I don't like where it's at now for it to just magically, reverse and start heading higher. But I like this idea for a longer-term play. I don't know that this is the best entry spot, so I wouldn't say I'd be in there going, hey, I'd like to load up on SoFi here. But you can't argue with what they're doing, right? They're doing things right there. You got a good bounce on AT&T. Yeah, over the last couple days. So this low for the moment has proven to be that bottom, and you'd expect that people would say, I've been holding off on AT&T. I don't want to invest in it. But now that I've got this low, presumably, in place, that pullbacks would be viable there. I can't argue with that at all. You wait for the market to pull back before dipping into the financials. They tend to run away once they get going. Very tough question. Yeah. There's a temptation to just dive in and go, oh, this is it. They're breaking out. This is the end of it. Most of them broke down trends like we talked about yesterday, Wells Fargo and others. I still wouldn't chase it. I have a hard time being in a chase mode with the broad market just chilling at all-time highs without pulling back 10%, not even more than 6% in the last year. That makes me go, I think it'll be a better opportunity. Yeah. Employers offering a traditional 401k and a Roth 401k. Should you do both or the same? So you want to consider your income now relative to your income in retirement. If there's a large spread there, that determines where you go. So if you are going to live on $50,000 in retirement, but you make $150,000 now, take the tax break now. Yeah, that's a simple answer, but that's one way to look at it. Cody's up for closing beat tomorrow. No, because if he does it, then you guys won't want me back, right? And you're going to be like, whoa, it turns out he's got all the knowledge, huh? Thoughts on Chinese stocks? I do think Chinese stocks find their support here in 2022. That was one of my focus areas there. You can look at a handful of different ETFs if you want to keep an eye on things. You've got A-share, the ASHR. My favorite is to look at the FXI. Two totally different things here, but this is a reason why you look at Alibaba. You see the same things. One of big components of FXI. So I look at this and say, yeah, you've got a floor. Not at the moment, but you've got the opportunity to say, there's a low coming in here somewhere. I'd be willing to try at a dip with a small position. Which index outperforms in 2022? Which index? So I'd go with the small cap, or I'd go with S&P 600. I'd have to go with the odds on that one without knowing much else. You think first month will be up because Roth contributions are better to put more money into the work? January is typically positive. It's one of the more consistently positive months. I have that data prepared and ready to show, I think, on Thursday or whatever, notes from Jazz or something. But yeah, it is typically positive. I think you can do both. Yeah. You got a 2022 stock pick there, Cody?
Yeah, I'll release that.
Oh, you're going to go with that?
I'll announce it later this week.
Later this week he's going with. Yeah. He's narrowing it down, huh? Kind of caught him off guard. He wasn't paying attention. Philip, looking for the best time to do a Roth conversion in 2022. Wait for a correction, do it now. Well, does it matter? If you're converting the full account, then you want to show the lowest number possible, right? I get that. But if you're just converting some of it, you've got all year, right? Wait for, you know that you're going to get a pullback. Even if it's just a wimpy one, you know that converting at all-time highs is just volunteering a higher number to the IRS. So given that there's 12 months, until you got to decide, hang out for a little bit. Right? You got midterms coming up. I'm not saying that causes a crash or anything, but anytime those political commercials start playing in like every other commercial on TV, people get all worked up. You know what I mean? And this is going to be a big one. So I think that makes people start to get a little jittery stock market wise. That could be your time to strike, man. You have no pressure for doing it. That's a good position to be in. You guys like your discounts here, huh? DraftKings down at lows. So DraftKings is in their spend a lot of money phase, and they're not letting up. And maybe that's a good idea. That'd be a great idea long-term for them. So because they're spending a lot right now, you have no reason to believe that they're going to just hit it out of the park with some kind of earnings. It's like Amazon back in the day, only a little different. But Amazon said, we make a penny, we spend a penny. We make $1, we spend $1. And that was their goal for a while. Remember, they had less than 0.25% profit margin, and that was their goal. They're kind of in the same spot, but obviously not at Amazon. You're making me go to Beyond Meats again? So I have no reason to say this is exciting. There's just nothing here. There's a lot of competition. They were overpriced. That's a tough one. There's no way I'd put any money towards that. No need. Any data on what the S&P does the next year after rising 20%? Yeah, actually, we ran that in the before the end of the year. You can run it in the research site if you're a member there. If not, no big deal. But we have the tools in there to basically, you can model anything you like. You can just say, I can't pull it up. Anytime something happens, what happens going forward? And so we shared that. Go back to the week before Christmas, I believe it was, or the week of New Year's. Yeah, give us a pullback there. Yeah, give us a pullback. I even last year, the amount of people that go, I'm fine with it. Pull back, Mark. I'm not going to buy anymore. I'm just going to sit back and wait for it to pull back. And didn't get it? Come on. This is your year, right? Get a New Year's resolution. That's what you want. Okay. By the way, KFC is working. They're going to launch meatless fried chicken with Beyond Meat nationwide. All right. With Beyond Meats, of course. Okay. I'll work it up, wrap it up from there. Yeah, stock market's broken. Is red existing? Well, maybe the Nasdaq. Smart percentage of your paycheck to contribute to your 401k plan. So that depends on what else you're investing in. Obviously, how much you make. If you make $300,000 a year or something, and you're putting 10% away, that's probably too much, especially if you're like 30 and you're one of those lucky ones. So you want to first figure out how much you got to save to hit whatever goal you have. So first thing we do with every new client here is we go, all right, let's just do a rough draft. Slap it all down on an email and go, this is what you need to save based on that, and start tweaking from there. So start with that. You want to figure that out first. And then you go, oh, well, that means 4% in my 401k, put a little in a Roth IRA as well, and then I'm done. And that's all I got to do. Is covered calls in ETFs a bad investment? Is selling covered calls on ETFs a bad investment? No. Very common. I mean, if you're comfortable with that, you know what's going on there, and you want to use ETFs. I don't blame you for doing that. A lot of people use, if they're going to use a consistent covered call strategy, they'll use ETFs rather than an individual stock because it eliminates, a lot of the earnings mess and some random news that comes out that could cause volatile moves there. Yeah. So, yeah, I have no problem with that. Very, very common there. Yep. Can you watch the Wine and Wealth classes with the research site? Some of them you can. We tend to talk about real specific things, stocks and things like that. So, or positions that we're buying and selling. So we can't make all of them live, but sometimes, yeah, maybe we can make this one, open to everybody. Help out everybody for the new year there. Been selling calls and puts lately. It's been mostly puts. I've always been waiting on a pullback, but it's chilling. Yeah, again, no stinking pullback. Yeah, everybody wants that pullback now. We'll see. Maybe tomorrow, right? S&P went negative for a little bit here today, but did finish basically flat. But I'll be back tomorrow. We'll do this all over again. You enjoy the rest of your evening there, and thanks for watching.